Hello everyone, let's start our today's discussion. I hope you all remember that in our previous class, we started discussion on past exam paper for Advanced Taxation exam for June 2025 exam attempt. In our today's class, we will be moving forward in our discussion and we will be looking at question number 2 of this exam paper. These past paper revision sessions are really important in finalization phase of your exam preparation, as they give you a real idea that how you have to deal with all of the topics together when you go for your actual examination. It also gives you a preparation for the time management, that how you have to handle the complete question in time restricted situation. While we will be discussing this complete exam paper, we will be using my life-saving summary notes. These summary notes are really important as they summarize the entire advanced taxation course in just 57 pages. All the topics are summarized in it. You can just search any topic and you can refer the relevant rules. For example, if you want to refer the rules relating to capital allowances, you will just write capital allowances and you will reach that topic, and so on. You can revise any topic while we are discussing these past papers. So it's really important that once you are done with your course study, you revise your course daily with my summary notes, and along with this you watch these past paper revision sessions. In this series of past paper discussion sessions, we will be discussing 7 complete attempt exam papers which you have to watch. Nothing to do, just watch me while I'm discussing these exam papers. And then you have to do 3 mock exams on your own, which you have to send me for marking and feedback. So this is the complete package which I provide to my students along with the course lectures. And this has been very successful, as this is the only reason why my more than 50 students in advanced taxation exam only have secured nationwide positions. Okay, so our class will be a very detailed one today. We'll read this introduction, this exhibit, cloak limited, the requirement tab, and then at last we will actually draft the whole answer in our today's class. So your patience and concentration throughout the class will be really important as we discuss all of these things. These will be really beneficial for you as we discuss them. Okay, and whenever we'll have to refer any topics, so for your revision, we will be using these summary notes in which I have summarized the entire course in 57 pages. This is a very good document. You can search the things and switch through the document. Okay, so let's start with it. Now you should assume that today's date is 1st March 2025. The finance director of Cloak Limited has requested advice on the corporation tax implications of the following: the sale of a warehouse and shares in subsidiary company, and commencing trading activities overseas via either a permanent establishment or a subsidiary company. See, this is the introduction of the question. It's very important that when you are reading the question in your actual examination also, you read with patience. Don't rush that the question is easy or difficult or whatever. Every question is easy. It's just about that how you approach that question, how you understand the things. I always say to my students that whatever you have studied throughout the course, that's just 50%. The real 50% is your actual examination, that with how much patience and concentration you understand the scenario. If you will rush, for sure you will fail. Just read with patience. Okay. The following exhibit available on the left hand side of the screen provides information relevant to the question. Exhibit 1, Cloak Limited. The information should be used to answer the question requirement within the chosen response options. There are 2 response options. One is word processor, other is a spreadsheet. How to use these response options, how to develop the answer, we'll be looking at all of these things in our today's class when we'll be actually drafting the answer. Let's start with this exhibit number 1, that's Cloak Limited. I want you all to listen to me carefully. Cloak Limited prepares accounts to 31st of March each year, has forecast taxable total profits from its UK operations as follows: £130,000 in the year ended 31st March 2025 before taking account of the sale of warehouse, and the shares in Set Limited, see below. So the profit is 130,000, but it is before two adjustments. There is some sale of warehouse and there is some sale of shares. Okay, we look at it. The two adjustments which we have to do here. And then 145,000 pounds in the year ending 31st March 2026 before taking account of the planned expansion. That also we need to see below. Okay. Acquired 80% of the ordinary shares in Set Limited on 1st January 2020. A company has 80% shares of another company. So 80% shares means that capital gains group and 75% group both will be formed. Because direct ownership is more than 75% and indirect ownership is also more than 75% because it's a direct subsidiary. So there will be no reduction while looking at indirect ownerships. I believe that you all remember the rules relating to groups. If you don't remember, still, it's not the actual examination. You have time. You can just go and write capital gains group. And here you go. You can find all the relevant rules. You can go and write 75% group and you will find that rules. Since still you have time to the examination, so you can always revise the things. Cloak Limited and Set Limited are both UK resident trading companies. Cloak Limited has no other associated company. Only this Set Limited is its associate. Otherwise, there is no other associated company. Acquisition and sale of a warehouse. On 31st March 2025, Cloak Limited will sell a warehouse to an unconnected person. Okay. See, we are reading the scenario. Cloak Limited acquired this warehouse, listen to it carefully, from Set Limited, its subsidiary, on 1st April 2025 for its market value on that date. Do not matter. That do not matter because the transfer within capital gains group is always at cost. And since it is after 31st December 17, okay, so the indexation factors have to be ignored. I believe you all remember these things. Now within group, the assets are transferred at cost. Okay, so it was a transfer within the group because we acquired the subsidiary shares in 2020. This warehouse is being transferred on 2024. Set Limited had purchased the newly constructed warehouse from an unconnected person on 1st April 2020 and began claiming structures and building allowance immediately. So that 3% annual structure building allowance was being claimed by Set Limited, our group company, and then this asset was transferred to Cloak Limited on 1st April 24. The following information is available in relation to the warehouse. 1st April 2020, this warehouse was purchased for 192. Building element was 102 and land element was 90,000. So why breaking up building and land? Use your mind. Structure building allowance. Structure building allowance is only on the building element, not on the land element. On 1st April 24, its market value was 234. On 31st March 2025, its market value was 255. Set Limited and Cloak Limited have used the warehouse wholly in their respective business since 1st April 2020. Okay. Rollover relief will not be claimed in respect of the gains arising on this sale. So whatever gain will arise when this warehouse will be sold, it will become chargeable because it won't be deferred through any rollover relief. Okay. See, just reading the information, identifying the key things, we'll read the requirement, we'll come back to the scenario. Currently, just focus on the reading of the question. That's the most important thing. Acquisition and sale of shares in Set Limited. Cloak Limited acquired its shareholding in Set Limited for £440,000 on 1st January 2020. Cloak Limited will sell the entire shareholding to an unconnected company for 510,000 on 31st March 2025. A company, listen to me carefully, a company selling shares of another company your mind should start working for substantial shareholding exemption. A company selling shares of another company, substantial shareholding exemption. Okay. If this should be an individual selling the shares, then our mind should go for business asset disposal relief. Individuals get business asset disposal relief, whereas companies get substantial shareholding exemption. If you remember this concept of substantial shareholding exemption, 10% or more ownership for 12 months out of last 6 years. So if you go and look at the scenario, our shareholding was 80%. That's more than 10%. And January 20 to 31st March 25, yes, 12 months period is done. Then we have details about this trading overseas. Okay. So now, if we stop here, because there were two things. One was in relation to March 25, where there was sale of warehouse and shares in SET Limited. And then for the next year, it was for overseas expansion. If you want, you can read the whole question together also. But since now it is trading overseas, which is of next year data, so you can go and refer the requirement. Since the data is fresh in your mind, so when you are reading the question, it's better that you can see that, okay, if there is any requirement which I can deal at this step, you should assume that today's date is 1st March 25. Part A. Calculate with supporting explanation increase in Cloak Limited corporation tax liability for the year ending 31st March 2025. In the year ended 31st March 25, there were two adjustments: sale of warehouse and shares in SET Limited, which we have already read. Okay. As a result of selling the warehouse and the shares in SET Limited as proposed, what will be the increase in the corporation tax liability for the year ending 31st March 31st March 2025. Then part B is in relation to overseas business operations. So I will copy it from here. Calculate with supporting explanation the increase in Cloak Limited corporation tax liability for the year ending 31st March 25 as a result of selling the warehouse and the shares in SET Limited as proposed. How many marks? 9 marks. Okay. You have professional skill marks for analyzing the rules, okay, evaluating the things, and commercial acumen. We already had a complete lecture on the professional skills, but still, just covering the requirement: analysis, financial and non-financial analysis, analysis of the tax rules in detail, ability to analyze the detailed working, evaluation, favor and against both perspective, evaluated, commercial acumen, that business insight, that practical advisory, what is favorable in long term or not, commercial acumen. See, you will just attempt 9 plus 5, 14 plus 6, 20 marks. These 5 marks will be a gift for you. These 5 marks will be a gift for you. You just need to ensure that while attempting the technical marks, you deal with the professional skills, like you analyze the rules properly. You ensure that your evaluation is complete. You show your commercial acumen. It's not necessary that in every requirement all skills will be involved. Just ensure the completeness of the answer and you will get these professional skill marks. Okay, just listen to me carefully. You will be able to understand in a much better manner that how actually you have to draft your answer. The question is Cloak Limited. This is your requirement. We just copied it from the requirement tab. You go and you click on copy and you paste your requirement here. Okay, and here you go. Okay, let's look at it. So calculate with supporting explanation the increase in Cloak Limited corporation tax liability for the year ending 31st March 25 as a result of selling the warehouse and the shares in SET Limited. Just listen to me carefully. Believe me, it's very easy. First heading, sale of warehouse. First issue is sale of warehouse. Another issue is sale of shares in set limited. And the last is increase in corporation tax liability. See, I am creating the portions. It's not necessary that you give the required headings, since in section B, in question 2 and 3, there are no communication skill marks. In question 2 and 3, there are no communication skill marks, so it's not necessary that you give the headings. I have just given these headings for my ease. I have broken up the requirement. Sale of the warehouse, shares in set limited, and then the increase in corporation tax liability, that how much will be the increase. These are the three things which we have to cover. See, it's not mandatory that you also divide it in three pieces. You can answer it in a normal way also. So don't create any stress on yourself that, oh, sir, how will I pick up that I have to create these three headings? No stress. You have to talk about sale of warehouse. Huh? The question will start with sale of warehouse. Okay, let's start. If you want, give the heading, otherwise no issue. Now, Cloak Limited will sell this warehouse. On 31st March 25, Cloak Limited will sell this warehouse to an unconnected person. This is what is happening. On 31st March 25, your profit is 130. That's before taking account of sale of warehouse. So, okay, Cloak Limited is selling the warehouse. For how much it will sell? It will sell it for 255,000 pounds. Okay, let's look at it. I'm using this table tool here. Okay, for the calculations, if you want, you can use this table tool, or if you want, you can do the calculations in spreadsheet also and give a reference. I particularly feel that it's easier to add a table on the Word document so that my whole answer appears on the single screen. But if you want, you can do it on spreadsheet also, whatever suits you. It's completely your choice. Now, disposal proceed. For how much it will be sold? It will be sold for 255,000. Okay. I will just copy the pound sign. Okay. It's better that you enter the pound sign, the currency sign. But if in the examination you don't have time, you can skip that also. I've copied it, and now every time when I will need it, I will press Ctrl V, or you can paste from here also. Otherwise, you can use the symbol tool also, okay, to insert the symbol. So it will be sold for 255,000. What will be the cost of the warehouse? Now here you need to think carefully. Here you need to think carefully. The reason being is that we got this warehouse as a result of intra-group transfer. We got this warehouse as a result of intra-group transfer. Okay. How did we got this warehouse? Cloak Limited acquired this warehouse from Set Limited on 1st April 2024. We got this warehouse as a result of intra-group transfer. Okay. Now, intra-group transfer, whenever you get the asset, you get it at its original cost. The original cost to Set Limited was 192,000 pounds. Just listen to me with patience. Believe me, you will understand each and everything. Okay. So, cost, I will add note 1. Okay. Cloak Limited acquired this warehouse from Set Limited, which is part of its capital gains group, as Cloak Limited owns more than 75% shares in Set Limited. Okay. Intra-group transfers within group are done at cost plus indexation allowance. Okay, indexation allowance will be ignored because the asset was acquired after 31st December 17. The indexation is still 31st December 17 only, I hope you all know. Okay, so the cost to Set Limited was 192,000. Okay, so here you go, that is your cost, 192,000. Just listen to me carefully. Believe me, you will be able to understand the things in a much easier way. Your disposal proceed was 255,000. The cost is 192. Cloak Limited acquired this warehouse from Set Limited, which is part of its capital gains group, as Cloak Limited owns more than 75% shares in Set Limited. Intra-group transfers within group are done at cost plus indexation allowance. I'm ignoring indexation allowance because the transactions are being done after 31st December 2017. The purchase was in 2020 and all things are after 31st December 17, so no need to do the indexation allowance. Now on this asset, structure building allowance was being claimed since 1st April 2020. Set Limited was claiming it. Now since this asset was transferred within group at original cost, so Cloak Limited must also have continued to use that same indexation allowance. So when we sell an asset on which we have claimed structure building allowance, so that element is reversed in capital gain tax when we sell that asset. Sir, I didn't get it. No issue. Just go to your summary notes. Write structure building allowance, SBA. Okay. Now see, whenever we sell an asset on which we have claimed structure building allowance, if you go down, you can find it. Yes. On disposal of SBA qualifying asset, allowance claimed till date is added back while calculation of capital gain tax on disposal. This means that allowance is claimed is reversed in capital gain tax. See, you claim structure building allowance in trading P&L, but when you sell that asset, you add that structure building allowance in your disposal proceed. Basically, you add it in your capital gain. So whatever SBA you have claimed in trading P&L, it becomes part of the capital gain. It shifts from trading P&L to the CGT. Now, note 2. Cloak Limited got or acquired this asset as a result of intra-group transfer at its original cost. Therefore, it must have continued the same structure building allowance which was being claimed by Set Limited. Okay, whole SBA claimed by the group till disposal date to unconnected party will be adjusted at the time of disposal. No disposal adjustment arises at time of intra-group transfer. See, that's completely logical that at time of intra-group transfer, since no gain is being calculated, so at that time no structure building allowance must have been reversed. If you look at the scenario, try and understand the things. See, Set Limited acquired it in 1st April 20, must be claiming SBA. Then Set Limited gave that asset. See, Set Limited gave that asset to Cloak Limited. When did it give that asset? On 1st April 24. It gave that asset to Cloak Limited on 1st April 24. So at that time, there would be no disposal adjustment because it was an intra-group transfer. Okay, same SBA would have been continuing. Now, when it is being sold to unconnected party, at that time, whatever SBA claimed till that date will be reversed. So from 1st April 20 to 31st March 25, 21, 22, 23, 24 and 25, 5 years. Value of the building 102,000. Okay. So SBA claimed from 1st April 2020 to 31st March 2025 will be 102,000 into 3% yearly into 5 years. So 102,000 into 3% yearly into 5 years. So that is 15,300 pounds. So that will be added here. 15,300 pounds. Okay, so that gives you the chargeable gain. So 255 minus 192 plus 15,300. So the chargeable gain here is 78,300. Sir, will you repeat it again? Yes, I will repeat it again. This is how I have always been teaching to you guys. I always repeat. You just need to listen to me carefully that how I am dealing with the things. See, calculate with supporting explanation the increase in Cloak Limited's corporation tax liability. Okay. See, disposal proceed 255 as a result of selling the warehouse. Cloak Limited is selling the warehouse for 255, the whole warehouse. What was the cost of warehouse? 192. Sir, why not the market value of 24? Asset was acquired through intra-group transfer. Okay. We will sell set limited shares in 2025, not at 1st April 24. So when we acquire anything through intra-group transfer, we get it at cost, 192,000. Okay. Indexation allowance will be ignored since everything is done after 31st December 17. All values are of after 31st December 17. If you want, you can write that comment. Otherwise, it's not needed. The examiner knows that. Reversal of structure building allowance. This was one of the things where student may make a mistake. Set Limited purchased the newly constructed warehouse from unconnected person on 1st April 20. Began claiming SBA immediately. So 1st April 20. Normally it should go till 24 because at that time Set Limited sold the warehouse. But stop a minute. It was an intra-group transfer. At that time, no capital gain was assessed. So, since it was intra-group, the transfer was done at cost. So, no SBA was reversed. The whole SBA will be adjusted when it is being sold to unconnected person. Okay. So, the whole SBA adjustment, 102,000 on the building element only. Please don't make the mistake. There is no SBA on land. Okay. You can find out the rules here. The value of land is excluded. Okay. There is no SBA on the land. It is on building only. It is on building structures only. Okay, so 3% into 5 years into the cost of the building structure. You got the SBA value, you reversed it, and here is your chargeable gain. Done. Now, shares in Set Limited. If we sell the shares in Set Limited, so for this I already discussed. Okay, sale of shares in Set Limited will not give rise to any corporate tax implication. It will be exempted due to substantial shareholding exemption as more than 10% shares were owned for a period of at least 12 months. We acquired in 20 and we are selling it in 25. So it's more than 12 months period. Sale of shares in Set Limited by Cloak Limited will not give rise to any corporate tax implications as this transaction will be exempted through substantial shareholding exemption. Okay, Cloak Limited had more than 10% shares for a period of more than 12 months in last 6 years. Okay, sale of shares by Cloak Limited of Set Limited will be a no gain, no loss transaction. Is it clear? If you don't remember the rules of substantial shareholding exemption, just use my life-saving summary notes. Okay. You still have the time. Exam is still away. So you can always revise the things. Okay. Now, increase in corporate tax liability. The last thing, that how much the corporate tax liability will increase. Let's look at it. Okay. Now, due to the sale of warehouse and sale of shares in Set Limited, the total increase is of 78,300 pounds. Okay. Now, the existing profit of Cloak Limited was 130,000 pounds. The existing profit of Cloak Limited was 130,000 pounds. Okay. The year end is 31st March. We are selling the shares on 31st of March. So this means that during the entire year, Cloak Limited and Set Limited were together. So the corporate tax limits, the upper limit of 250,000, if you remember the limits will be broken down. Okay, the limits get divided by number of companies with you. Now here number of companies means in which you have at least 50% share ownership. Just listen to me. Corporation tax rate limits of Cloak Limited will be divided by 2 for the year ended 31st March 2025 as said limited was with it throughout the tax year. You sold it on the last date, but throughout the tax year it was with you. So it will divide your limit. It was with you throughout the tax year. Okay. Upper limit for corporation tax will reduce from £250,000 to £125,000. I hope that you know these basic things, the corporate tax upper and lower limits for the tax rate. Okay. Now, Cloak Limited's profit for year ended 31st March 2025 after adjusting sale of warehouse and sale of shares of said limited will be how much? The profit already was £130,000. So that was above the upper limit. Okay. 130,000 plus this 78,300 will be £130,000 plus £78,300. So that will give us 130 plus 78,300. So that will be 208,300. This exceeds the upper limit. Therefore, whole profits will be subject to corporate tax at main rate. Okay. Increase in corporate tax liability will be of 78,300 because question was not total tax. The question was increase will be 78,300 into 25%. The main rate is 25%. So that's 19,575 pounds. Sir, can you repeat it again? Yes, I can and I will. Sale of warehouse. Disposal proceed. Sale by Cloak Limited. 31st March 25. 255,000. Less the cost. You got it as a result of intra-group transfer. Reversal of structure building allowance. So the total gain element which will be included in your corporate tax working is 78,300. Sale of shares will be exempted due to substantial shareholding exemption. How much corporate tax will increase? Since there were two companies in the group, Cloak and Set. Okay, so the limit will reduce from 250 to 125. Our profits already were above this limit. 130,000 was already above the limit. So this exceeds the upper limit. Whole profits will be subject to corporate tax at main rate. Your corporate tax liability will increase by 19,575. I believe it wasn't difficult. It was something which was easily doable. Yes, this reversal on SBA, maybe some students may get confused. Otherwise, it was a routine thing. Okay, let's move forward. Okay, so now we are done with this requirement about the implications for sale of warehouse, sale of shares in said limited. Sale of shares in said limited by Cloak Limited will not give rise because the shareholding was more than 10% for a period of more than 12 months. It was covered through substantial shareholding exemption. And then we discussed about the increase in corporate tax liability. I believe that this was an easy part A requirement. Now let's move towards part B1 and then we have to read the relevant exhibit also. On the assumption that the overseas business is carried on by Cloak Limited through a permanent establishment in the country of Headlia, calculate the total tax by Cloak Limited for the year ending 31st March 26. Okay, let's look at it. There is nothing to worry about. Okay, let's look at it. I want you all to listen to me carefully. Now, so now we should go and look at this overseas business thing, that how it is going about. Okay. I believe that things are getting clear. If you have any query, you can always contact me directly on my WhatsApp also. Okay. Now we are moving forward. Cloak Limited trading overseas. On 1st April 2025, Cloak Limited will commence trading in the country of Headlia, either through a permanent establishment in Headlia or by incorporating a wholly owned subsidiary company. Either we'll go for permanent establishment, a branch, or we'll go for subsidiary. If it is a branch, it is part of your UK based company. Its profits will be normally taxed in UK as it's part of UK based company. Whereas subsidiary, so subsidiary is a separate legal entity, then you need to look at whether that subsidiary is UK resident or not, that complete debate. If you don't remember, you can just go and write overseas issues, overseas IST, overseas individuals. Then you will find the issues of companies also in overseas. Okay. Just a second. A lot of times this word overseas is used. Here you go. No, it's still individuals, overseas VAT, in the corporate tax, and then you go down consortium and the overseas company issues. Okay, in the overseas company issues, you can see operating as a branch, a permanent establishment, or operating as a subsidiary. Branch is a part of UK based entity, taxed in UK in a normal way. Subsidiary is a separate legal entity. Okay, and if it is a non-resident company, there won't be any UK tax on it. Okay, I hope that you guys remember the rules. The overseas operation will have a forecast taxable profit of £30,000 after all relevant deductions for the year ending 31st March 26. It is expected to remain profitable for the foreseeable future. Operating in Headlia through a permanent establishment. This would be the Cloak Limited's only permanent establishment located in overseas. Cloak Limited will not make an election to exempt the profits of overseas permanent establishment. If you remember, there is a concept of exemption. When you make the election of exemption, the overseas branches get completely exempted forever. No tax on their profits, no loss relief available. But that is a lifetime election. But he has made it clear that they will not go for that election. Operating in Headlia through a wholly owned subsidiary, would be incorporated in Headlia, would pay dividend to Cloak Limited, will not be a controlled foreign company. The rate of tax of profit in Headlia is 22%. There is no double taxation treaty. When there is no double taxation treaty, you get double taxation relief in a default manner, which is lower of UK tax and overseas tax. When there is no treaty. When there will be a treaty, you will have to follow the clause, that what the clause is included in the treaty. I will repeat it again. Treaty means an agreement. If there will be a double tax treaty, then what the relief will be, you will have to look at that treaty, you will have to look at that agreement. But if there is no double taxation treaty, then double tax relief is at lower of two things, the default relief, UK tax and overseas tax. You've studied all of these things already also, that in overseas operations, the double taxation relief, if there is no treaty, the relief is at lower of two things. If a treaty exists, then you will need to read the treaty, and that clause will be available in the examination. And it has been examined in the past exam papers about giving a clause of a treaty. Normally it is like that one country will take tax and another will not take tax. But that depends that how the question data is presented to you guys. Okay, now, so if we look at the requirement, on the assumption that overseas business is carried through permanent establishment, calculate the tax payable by Cloak Limited for the year ending 31st March 26. Believe me, a very easy requirement. I will just add a table here. Okay, UK profits of Cloak Limited. What were its UK profits? Just go and look at it. for the year ended 31st March 26. Now we are talking about 31st March 26. 145,000 was your profit. 145,000 was your profit for the year ending 31st March 26 before taking account of the planned overseas expansion. Okay, that was your normal UK based profit of Cloak Limited. 145,000 pounds. Okay. Profits of overseas branch or overseas permanent establishment. So those profits will be how much? It will be 30,000 pounds. Okay, here I go. Okay, profits of overseas branch or permanent establishment are taxed as part of UK company as a normal profit. Okay, because branch is not a separate legal entity, it is just part of your normal operations. So here you go, this is your total profit and that will be 175,000 pounds. Now you have to calculate corporate tax liability on it. Okay, you have to calculate corporate tax liability. Corporation tax on profits. Okay, you have to think about that. Now, in the year ended 31st March 2026, we don't have any company in the group because we have already sold Set Limited on 31st March 2025. Just listen to me carefully while I deal with it. Note 1. In the year ended 31st March 2026, there is no company in Cloak Limited's group as Set Limited was sold in the year ended 31st March 2025. Okay. Upper limit will be, upper limit for corporate tax rate will be 250,000, remains at the same level, and the lower limit will be 50,000 pounds. Okay. Profits of 175,000 pounds lie between upper and lower limit. Therefore, main rate of tax will be applied along with marginal relief. If you guys remember, okay, the main rate 25% rate along with the marginal relief. Now it is completely your choice. You go with the marginal relief thing or you use those bands. On first 50,000 you apply 19% and then you apply that marginal rate of tax. If you remember those concepts, we have already studied it during the course discussions. You can either use the marginal relief, apply main rate on the whole profit and then apply the marginal relief. Otherwise, you can use the tax bands also. Okay. So while calculating the corporate tax, it's completely your choice. Okay. Like we have studied it in during the classes also, but still just to show you guys in the corporation tax, okay, you can use these rates also. Okay. Like you can use this small up to lower limit 19%, then between upper and lower limit use this 26.5%. Otherwise you can go for the marginal relief thing also. Okay. Now if you want to go for the marginal relief thing, you will go in the tax tables, you will scroll down, you will go to the corporate tax section. Okay. And here you can see the marginal relief formula. Okay. The marginal relief formula. If you are comfortable using this, you can use this also. Otherwise, you can use those very easy bands. 50,000 into 19%. I will repeat the things again also. So that's 9,500 and then 175,000 minus 50,000 on 125,000 you will apply 26.5%. Okay, 125,000 into 26.5%. So that's 125. So your total corporate tax will be 42625. Now just listen to me. If any student wants, he can do with the concept of marginal relief also. If any student want, he can do with the concept of marginal relief also. You have to do with one of them, not both of them. Just showing you in the examination, you will use any one of them. Okay, just showing you. In case of marginal relief thing, you apply main rate on the whole profits. 175,000 into 25%. So that is 43750. And then you will deduct marginal relief from here. How do you calculate marginal relief? Your upper limit 250,000 minus your augmented profits 175,000. Now since there is no dividend thing, so the taxable income and the augmented profit will remain same. Multiplied by taxable income divided by augmented profits multiplied by the standard fraction 3/200. See, this formula is given here. Upper limit minus augmented profit into standard fraction 3/200 into taxable profit divided by augmented profit. So if you use this technique, so 250,000 minus 175,000 and then, so your marginal relief will be 1125. So in this case also 43750 minus 1125. So that will give you that same 42625. If you want, you can use these bands also. Normally students are more comfortable in it. Otherwise, you can use this marginal relief approach also. Whatever you are comfortable with, there is no issue in it. Okay. So I'm just showing for you guys, you are not required to do both of them. Alternative method. Okay. In exam, show any one. 175,000. Okay. Then the marginal relief. Okay. And your final corporate tax. So this is alternative. If you want to use this, you can use this one. Otherwise, you can go for this one, whatever you are comfortable. Okay. Now, I will remove it from here. Now comes double taxation relief. Double taxation relief. Note 2. Double taxation relief will be available as profits of overseas operation were also taxed in which country it was? In Headlia. In Headlia. Okay. Double taxation relief will be at lower of two things. Okay. Just listen to me carefully, since there is no double tax treaty. So it's lower of two things. Overseas tax. What is overseas tax? Your overseas profits were 30,000 pounds and the tax rate in Headlia was 22%. So 30,000 pounds. 30,000 pounds into 22%. So that is 6,600 pounds. And UK tax on overseas profits. Here you need to be a bit careful. See, your overseas profits were 30,000 pounds multiplied by. What was the UK tax rate? In UK, there were two rates involved. You don't know that what was the final tax rate. So you will calculate the average tax rate. 42625 was the total tax which you paid on the profits of 175,000. So you will get the average tax rate. Okay. This is how you calculate the average tax rate, I believe. This is how we calculate the average tax rate. 42625 was the total tax which you paid and 175,000 was your total profit. So that was your average tax rate. So what was your UK tax? 42625 divided by 175,000. So your average tax rate was almost 24.3% multiplied by this 30,000. So that gives us 7307. So obviously this 6,600 was lower. Okay, so this is your UK tax liability. 42625 minus 6,600. So it's 36025. Sir, will you repeat it again? Yes, yes, yes. How is it possible that I don't repeat? I enjoy repeating it. Okay. So calculate the tax for the year ending 31st March 26. UK profits of Cloak Limited you already knew. Profits of overseas branch that give you the total profit. Then comes the corporate tax. Note 1. In the year ending 31st March 26, there is no group company. So the limits will remain normal 250 and 50. Okay. Profit lie between upper and lower limits. So you will use main rate along with marginal. So now if you want, you can use these bands also up to lower limit 19% and then 26.5. Otherwise, apply main rate on the whole profit and then go for marginal relief. The formula of marginal relief is available in the text tables, which will be available in your examination. Done. Double taxation relief. Overseas tax was 22%. For UK tax, 30,000. The same overseas profit on which we are talking about double tax relief. And the average tax rate. How do you get the average tax rate? 42625 was the total tax on 175. You want tax on 30,000. So 42625 divided by 175 multiplied by 30,000. So you'll get UK tax on overseas profit. Lower off is your double tax relief. You applied here. You got your final tax liability. This is what he asked for you. Now comes the last requirement. Very easy one. Let me copy and paste here. Just a second. This, oh. This is our part B2. See, these formattings are not mandatory. I'm a bit over conscious guy. Otherwise, it's not necessary. On the assumption that the overseas business is carried out as a wholly owned subsidiary, explain the UK tax implications of this strategy for both the Cloak Limited and subsidiary company. Your answer should include an explanation of the corporate tax consequences of the receipt of dividend from the subsidiary company. See, believe me, it was a very easy requirement. If you make a subsidiary, it's a separate entity. First of all, it's separate from Cloak Limited. It's not part of Cloak Limited taxation. Make it clear. It's not part of the Cloak Limited taxation. Okay, it becomes a separate legal entity. Now, when it becomes a separate entity, you will have to look at the residency status of that company. Since that company will be an overseas business, it's not a UK business, it's a separate business, it's overseas. So it won't be UK resident. Okay. If I'm writing along with it also. If overseas business is operated under structure of subsidiary, then its profits will not become part of Cloak Limited corporate tax return. It will be a separate legal entity, as it will be a separate entity. Done? That's clear? Now, taxation of overseas subsidiary will depend on its residency status. As it will be an overseas company, since it's overseas subsidiary, will be an overseas company with operations also in overseas. Therefore, it will not be UK resident. It will not be a UK resident company. It will not have any UK tax implications on its profits. There will be no UK tax on it. See, I am developing the answer, going step by step. Overseas subsidiary is a separate company. Look at its residency status. It is an overseas company with its operations in overseas. So it has no relation with UK. Okay, now, what about its dividends? Dividends received from overseas subsidiary will not be subject to any UK corporate tax, as dividend income is an exempt income for corporate tax purpose. Done. I have developed all the basic things. If it is operated as a structure of subsidiary, then its profits will not become part of Cloak Limited, not part of Cloak Limited corporate tax return. Okay, will depend on its residency status. It's an overseas company with its operations in overseas. No implications in UK. Dividends are exempt. Now, one important implication. If it will be a subsidiary, even though it is an overseas subsidiary, it will divide our corporate tax limits. However, subsidiary will divide corporate tax limits of Cloak Limited even if it is an overseas subsidiary. Okay, corporate tax rate limit will be divided by 2, as there will be 2 companies in group, Cloak Limited and this overseas subsidiary. Done. The limits will be divided by 2. Upper limit will become, I was pasting the pound sign. Let me copy the pound sign again. Control C, copy. Will become 250,000 divided by 2 will become 125,000 pounds, and lower limit will become 50,000 pounds divided by 2. It will become 25,000. Now, when the limits will decline, what will happen? Now, if you look at Cloak Limited's UK-based operation profits, its profits of UK-based operation were 145,000. So now they will exceed upper limit and they will become subject to main rate. Earlier, if you remember, it was between upper and lower limit, because upper limit was 250,000. Okay. Now, profits of Cloak Limited of its UK-based operations of 145,000 pounds will exceed the upper limit. In this case, its entire profits will be subject to main rate of corporate tax of 25%, and there will be no marginal relief available on it. Okay, because when it exceeds the upper limit, you don't get any marginal relief. When it exceeds the upper limit, you don't get any marginal relief. It will be completely subject to the 25% rate of tax. Okay. Okay. So if you look at it, it was a very easy piece of cake requirement. Explain the UK tax implication of this strategy for both Cloak Limited and subsidiary company. If it is operated as a subsidiary, then its profit will not become part of Cloak Limited corporate tax return, as it will be a separate entity. Its taxation will depend on its residency status. It is an overseas company and business in overseas also. So it's not a UK resident company. It will not have any UK tax implication on its profits. It will only pay its tax in headlium. Dividend receipt will not be subject to any tax. However, it will result in the division of limits. And whenever limits get divided, what happens is that the marginal relief which we were getting will not be available now. Because now our profits will exceed the upper limit. The upper limit will decline to 125,000. If you go and look at it, it's done. So such a small answer for 6 marks. Yes, there is no issue in it. It's not like that in advanced taxation you have to write that much number of points. It's about completeness of the answer. Whether you have answered it completely. Yes, we have commented on everything. We have commented on the limit also. So yes, the answer is completed. So if you look at it, I believe it was an easy requirement, not a difficult one. If I look at this answer on overall, first requirement, sale of warehouse. Just this reversal of structure building allows maybe a student can make an error. Otherwise, no possibility of mistake. This overseas branch thing, believe me, very easy. Like if you feel that these upper limit, lower limit is difficult, then you need to revise the things because this is something which a skills module student can also do. Okay. And then the subsidiary case, you have all rules written clearly here. If you go at my summary notes and if you have studied my classes, like in the overseas corporate tax issues, all the rules here, like operating as a subsidiary, operating as a company, as a branch or as a subsidiary, everything is written clearly. And we have covered them in detail during our class. So we are done with this question number 2 of June 2025 exam attempt. Okay. It's the series of past paper discussion sessions, and I believe that it wasn't a difficult one. In the next class, we'll move forward. We'll be looking at question number 3. If you have any query, feel free to contact me directly on my WhatsApp number. Okay. Thank you, everyone.